Michael Burry is not your regular everyday investor, and you better believe me when he says this. If you follow the trends in the US stock market and the financial sector in general, then there's a big chance that you might have heard of this phenomenal investor before. Is there really something that could be worse than a recession? Famous for consistently defying Wall Street trends and patterns, Burry's most recent investment call is particularly startling. Are we likely to witness a reoccurrence of the subprime mortgage crash all over again? Or just how accurate can Burry be this time around with his foretelling of an imminent crash in the US stock market and a looming recession? Hello 101 community, welcome back to our YouTube channel. Stick around as we unravel the details of Michael Burry's most famous warning and how true his prediction of an impending economic crash might be. But before we begin, if you're new here, subscribe to our channel and turn on notifications to never miss any updates. An undeniable fact about Michael Burry is that his wealth of knowledge and experience in the field of stock investing can only be matched by a few investors around. Burry is widely renowned for being one of the first investors to foresee the subprime mortgage crisis that rocked the global economy between 2008 and 2010 and make enormous profits from it. Burry himself has attributed his extraordinary intelligence and stock-picking successes to his traditional understanding of value. His genius has earned him an occult following on Wall Street and has even had his character portrayed in a 2015 movie titled The Big Short. While many Wall Street investors still believe that the US economy's medium-term outlook won't be as chaotic as initially anticipated a few weeks ago, Burry is taking no chances and has made the most extraordinary financial gamble of his career yet. In a recent interview with Business Insider, Burry sternly warned that an even bigger financial crisis is on the horizon than we might think. According to the seasoned investor, the next crash will be worse than the 2008 financial market crisis and would have an even stronger generational effect. An economic slowdown has been ongoing since the start of this year, especially in the stock market. The 2008 recession served as a wake-up call that nothing can ever be perfect and always rosy, and that we should constantly be ready for the worst. While a financial crisis can be a terrible moment for normal people, it is also a terrific time for professional investors, according to the famous American investor Robert Kiyosaki. When asked about the recession, Burry sees it as a challenge to be met by making smart decisions and making the most out of rare opportunities. This way, you'll be better positioned when faced with tough financial times. In a move that came as a shock, Burry cleared out his portfolio, selling off his stocks recently. This is the most significant sale so far this year. With this move, Burry is staying true to his investment philosophy and is clearly keeping away from the flock. If you have any idea how this investment guru operates, then it will be easy for you to identify the pattern that's already playing out. As he did over a decade ago, Burry has begun the process of positioning himself for a bigger opportunity that many other investors still didn't identify. Many economists have also warned that the already high interest rates could signal an impending economic slowdown. Burry shares this opinion on the future of the US economy. From his most recent statement, he is very certain that the worst is yet to come, and that many homes could soon face a severe debt crisis, which would further fuel the collapse of the economy. According to data from the Federal Reserve, US consumer borrowing increased by $40 billion in June this year, setting a record as the second biggest increase ever in a single month, and being just $7 billion short of the highest increment earlier in March. It seems people have learned to relive their spending as a result of the COVID injections, and it has now become quite addictive. In spite of rising costs, consumers are now increasingly unable to take their spend back or even decrease it. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. You can also support the channel by visiting our merch shop and buy one of our products. The link is also in the description. Let's continue with the video. Michael Burry believes that overspending in the recent past has caused a lot of households to liquidate their savings accounts and leave themselves in a financially unsecure position. While only a few other Wall Street top guns agree with Burry's analysis, the guru has continued to warn that it's this combination of over-leveraged households and decreasing real personal income that spells the most doom for the American economy. As people's incomes decrease, and this in turn reduces the consumption expenditure power of households, it has a knock-on effect on companies. It's only a matter of time before major tech companies like Google, Amazon, Meta platforms, and other big tech stocks collapse, bringing the rest of the market down with them. Burry predicted these disastrous financial results months ago, even though they continue to surprise many investors. He has been warning about this for a while now in his tweets from last year, and it seems as if one of the largest stock market bubbles in history is about to burst. According to available data, real personal income has grown by 0% in 2022, and Burry believes that all of these underlying problems are signs of an impending credit market disaster. Burry believes that, despite the job market appearing to be in good shape, it is actually in decline, and that any future failures would lead to a further decrease in real income, which has traditionally been connected with returns on the S&P 500. Credit and debit card spending, which typically accounts for about 20% of total payments in the US, increased by 8% in July, while card spending per household also increased by 5.3%. This unrestrained household cash burn has since continued and is still showing no signs of stopping anytime soon. Now, recent data from the Empire Health Manufacturing Index supports what Burry had already predicted about the state of the labor market. The indicator was printed at minus 31.3, its lowest level since 2009. Much below forecasts, indicating that the job market is indeed in decline as Burry had projected. Following an 8-month trend of decline, the NAHB Housing Index data, which has a negative correlation with the U.S. unemployment rate, has also reached its lowest point, all corroborating Burry's claim regarding a looming economic catastrophe that'd be worse than a recession. With his filing with the SEC on August 15th, Burry effectively provided the strongest proof of his pessimistic outlook for the American economy for the rest of the year and substantial part of 2023. According to this report, Scion Asset Management, Burry's investment vehicle, had sold off all of its holdings in U.S. stocks as far back as June 30th. Currently, Burry only holds slightly above 500,000 shares of GEO Group, a company that invests in private prisons and is worth only about $3.3 million and has a market capitalization of $943 million. Before sending shockwaves across the U.S. stock market with his large-scale clearout, Burry held sizable stakes in 11 U.S. corporations, including some of the most recognizable brands on Wall Street. Through his company, Scion Asset Management, Burry maintained positions in Apple, Alphabet, the parent company of Google, as well as Meta, the parent company of Facebook, Instagram, and WhatsApp. He even held a bearish position at Apple. In fact, back in March 2022, GEO Group was not on the list of companies that Burry had investments in, making the company a new and notable addition to the list. Burry had adjusted the size of his U.S. stock holdings before, but the massive scale of this most recent resizing is what makes it rather unusual. Going by available records, the seasoned investor similarly decreased his portfolio in the third quarter of 2021 from 20 holdings to just 6 holdings in a span of 3 months. It's now very obvious that the downward trend of the economy isn't something that Burry just noticed. He's made this prediction way longer than we all realize and has since been positioning himself to minimize the impact of the highly anticipated economic crash, while also making huge gains as he did during the global financial crisis of 2008. Burry is clearly putting his money where his mouth is as regards to his prediction of a possible market crash through these rather drastic calls, leaving many Wall Street investors puzzled as to whether the famed investor sold too soon. Even before the news of his incredibly bearish stance on the outlook of the economy made headlines, Burry had always shared what many Wall Street analysts consider to be extreme bear market beliefs across social media platforms, especially Twitter. In fact, only just 3 days before news of his most recent sell-offs made the headlines, Burry still emphasized his pessimistic view of the market in yet another of his tweets. He wrote, "Nasdaq now up 23% off its low. Congratulations, we now have the average bear market rally." Across 26 bear market rallies from 1929 to 1932 and 2000 to 2002, the average is 23%. After 2000, there were two 40% plus bear market rallies and one 50% plus rally before the market bottomed. Burry remains unconvinced and has chosen to continue holding a bearish outlook, despite the fact that the market started the third quarter by gaining significantly, proving to investors that the stock market can still rebound even in the face of the hardest macro environments. Burry has shown a lack of faith in the stock market, and it shows through his shrinking portfolio. According to Burry's perspective, the economy doesn't seem to have changed much since the 2008 financial crisis. The fundamentals are largely the same as they were back then. So, if a devastating recession could happen then, an even more catastrophic one could occur now, and only diligent investors who foresee its coming can position themselves to make it a get-rich recession for themselves. This brings us to the end of the video. We hope you can use this information for your personal benefit. Stay educated. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you will be notified of every update. Also, don't forget to check the links in the video description. And with the world still not knowing what is happening, you might want to check out our video, in which we detailed 7 tips on how to profit and build wealth during a recession. For more videos on financial tips like this one, make sure to smash that subscribe button and give this video a thumbs up. I will see you there. Take care and stay tuned.